We all know that on a retail basis, 95% of people have blown up their trading accounts within 6 to 9 months. But we also know that 5% succeed, and that people follow Phil and Akil and PSE and everything you're involved with, Jonathan. You know, that they're amongst the more successful people.
Welcome to a combined Shepheard-Walwyn Property Share Market Economics podcast. I'm your host, Jonathan Brown. Today we welcome back Andrew Pancholi, founder of the Market Timing Report and co-author of the best-selling book 0 Hour. Now, Andy had a dual career for a great deal of time. He's one of the world's most experienced pilots. He's a fellow of the Royal Aeronautical Society. But also, I think for most of our conversation today, he's also one of the world's top forecasters. And he's on the board of the Foundation for the Study of Cycles. He made headlines last year when he predicted the February 25 market top, which caught Wall Street by surprise. He's previously forecasted the 2020 pandemic 2 years ahead, and the exact dates of the Ukraine invasion weeks in advance, the Israel-Hamas conflict, and most recently, he made some remarkable predictions and forecasts around the Israel-Iran-USA conflict that's currently going now as we speak on the 14th of March 2026. Andy, welcome back to the podcast.
Thank you, Jonathan. It's great to be here.
So, Andy, what forecast did you make around the Iran-USA-Israel conflict, and how did you do it? Can you show us some receipts?
Yes, of course. Let me just bring some slides up and we can walk you through it. I think let's start at the front end and then work it backwards. And the whole notion of everything we do is that history repeats, and when it doesn't repeat, it rhymes, and it rhymes in the long term. And then you can break these down into harmonic patterns and hone things down to the day. And perhaps if I just start off with an email we put out to our followers on the 26th of February, went out at 9 p.m. UTC, saying we just really wanted to draw your attention to what was coming up. It was quite urgent, and that cycles were going to peak on the 27th. That's the next day. And these are cycles relating to the United States, Iran, and Israel, and run through over the weekend. Well, of course, it also was tying up with financial instruments. So we were looking at things impacting oil, especially, as well as the markets and so on, various markets. So there's this idea of market cycles are confirming geopolitical events. But there's a lot more to this. If we go back to the year ahead edition that was published on the 8th of January there, one of the clear things was really this idea of Trump had just gone into Venezuela, and this was acting as a detonation fuse. And basically, this was like the trigger for some very long-term cycles. And it was really all about oil, which wasn't that evident back then. It was all about, remember the story, the lead story was narcotics then, wasn't it? And things like that. But in the year ahead edition, we put here, and I'll show you how we did this, a trigger point around the 1st of March. So we were one day out. And actually, there are other dates that are in the year ahead report, but these were the first ones. And there was also this notion of the 5th to 6th of February. And he made a very important announcement on that date, stating his global plans. That's from the White House website. But of course, the day after that, the 1st of January, was just one day after. They went into joining forces with Iran and Israel into creating this conflict. But also at the end of January, on the 29th of January, now this is the key point of how those are daily cycles coming together. We had published this looking at how history repeats, and what are the patterns we look at, which is evident in markets as well as history, is a 45-year pattern. And basically 45 years back in January, and that was the key point, is we were fine-tuning this down to the month, and we were only a few weeks out, and that's how we fine-tuned it using smaller dates. But go back 45 years, and in 1979, the Ayatollah had returned, the theocracy had been reinstated, toppling the Shah of Iran, and there had been this siege at the American embassy, and a bunch of Americans had been taken hostage. The negotiations failed. Jimmy Carter, who the Iranians hated, tried to launch Operation Eagle Claw to rescue these people. It was a disaster. It failed. But then on the 20th of January, 1981, 45 years ago, just before literally within hours of the inauguration of Ronald Reagan, so there's a little bit of thawing in relations. And these cycles suggested here that basically the American hostages were released. And therefore, we saw this change in the relationship between America and Iran. So that's the key point with the 45-year cycle. But if you double that cycle up, just very quickly, going back to 1936, 90 years back, there was the father of the Shah of Iran, who was the Reza Shah Pahlavi, forced significant modernization. And he was also the grandfather of the guy that's been trying to rebel this last few months as well. And they wanted to move towards the West. They wanted to ban the Islamic veil, the hijab. And this is what was known as the unveiling policy. So we can see the 90-year cycle was suggesting more of a swing to the West. And I think that's what the eventual outcome will be. It's not going to be in the short term, but this is the turning point. And you could see also how the 45-year cycle came together there as well. Jumping ahead a little bit, but we did see these histograms where we see these cycle peaks. We do see where the markets are likely to move. I can come back to that one, but that's some of the background there of how we combined the short-term cycles with the long-term cycles. And we keep big timelines of what goes on between different countries here. And that's the key to all this sort of forecasting and then tying it in with money markets as well.
Brilliant. Brilliant. I know some of especially people who are subscribing to property share market economics will have seen you present quite a few times now. But I'm conscious, I think I said welcome back to the podcast, but this is the first time you've been on this podcast, but I have introduced you to some of the talks. I just wondered if you could give people who don't know an idea of how someone can have a dual career. I know you've run a hedge fund and worked in the markets, but also as a pilot, I think as a wide body pilot and instructor. Wide body being the biggest jets like the jumbo jets and the Airbuses and stuff like that. So how did all that come about?
I was following a dream. I guess in my upbringing, I was always fascinated by cycles, partly through cultural upbringing from the background that my ancestry hailed from. And
when you say that there's a family background in cycles, mate, what was that?
Well, what we see is that from an Indian background, a Hindu Indian background, but what you do see is that the lunar calendar is very prevalent. And my parents, particularly my mother, was a devout Hindu, and people will fast on certain days in the lunar calendar and so on, and certain months are more auspicious and more religiously aligned. So basically what we're really seeing is the cycles are dictated by a lunar calendar is really what we were saying. But if you do, a little bit of a digression now, but if we do look at the Vedas, the sacred books behind Hinduism, they talk about the yugas, these very big cycles of 432,000 years and so on. But the idea was that I was brought up with this notion of cycles. I did want to be a pilot, but also it was very, very difficult to do so in that day and age. And so basically I followed two careers. One was in economics and that area. And the more I studied economics, the less inclined I was at higher levels of study to actually put everything into mathematical equations and calculus. The one thing that I noticed worked very clearly was historic. A lot of if you study the social and economic history of America, you can see how these booms and busts and railroad booms and all this sort of stuff. You could see the K wave, the 60-year cycle. So that really piqued my interest. And basically, I've been studying cycles really since a teenager. I just found that the more I studied them, the more to it. And then I really started applying them to market forecasting as well as human behavior. And then I realized that if you keep looking at it, it's very geeky, but you can narrow these down to individual days that we've now got a very successful track record of doing over the last 20, 30 years. So I find it fascinating that human behavior moves in mathematical patterns, and therefore things can be not necessarily totally forecast, but they can be preempted, i.e. we can get a good weather forecast of what lies ahead. And every now and then we can actually preempt an event when you can see it happening.
So it's an interesting thing when I was researching your experience. I didn't know about the foundation for the study of cycles and the perceived legitimacy of believing in or following cycles and using them to forecast appears to itself go in cycles, doesn't it? And so you were
Yes.
like 40 odd years ago, if you were into cycles 40 years ago, you were a total crackpot.
That's correct. We still are. And we're very proud of it. Yeah.
But there's also, if you go back to 100 years, so if you can tell us a bit about how the foundation got founded and where that came from with Edward Dewey and others.
Yeah. So the foundation was officially founded in 1941 by the US presidency. And I believe Roosevelt was one of the key people behind this. And the reason was that nobody, supposedly, we know people like W.D. Gann call this, and we've seen in his other writings that, he was very prepared for this. But of those who sit in the White House and other places, and not just in America, in the Houses of Parliament, wherever you want to call it, Downing Street, none of them are aware of what lies ahead. And so when the 1929 top came and the crash, which then led to the Depression, the Great Depression, caused havoc across America and the Western world. And so it was, as America came out of this, could anybody have seen this coming? And everybody went, no. Of course, no, it's just random. But they decided to investigate this and set up the foundation for the cycles. And that was put under the leadership of Edward Dewey, who was the chief economist. And he then started noting these patterns. But of course, if we go back, Gann called this very clearly, because we've already mentioned the 45 and 90-year patterns with regards to Iran and America, but the 45, 90-year patterns still exist in markets. So what we see here was that Gann had looked back 90 years and saw the crash between 1837 to 1842. And he'd put that together and forecasted the 29 top. So this was this idea of perhaps some acknowledgement, not that Gann had anything, Gann was, Gann died in 1955, so I don't know whether he did have any interaction with it, but Dewey was a great researcher. His work was very extensive, and of course, predominantly, but not exclusively, surrounded the 18.6 year cycle. And obviously, our dear friends Phil and Akila are very much experts on that. And Fred Harrison, of course. That's what the foundation looked at, that there are a lot of other cycles covered. And, if you were just to sort of toy with that cycle a little bit, in 10, 18-year cycles is 180 years, and half of that is 90. So there is this parallel there. It's approximate. There is some degree that human behavior is generational. 18 to 20 years is a generational cycle. That was the key foundation for the beginning, or the genesis of the foundation for the study of cycles, to see if future events could be forecast, especially depressions, and therefore some action could be taken to lessen the magnitude of the economic downturn that lies in front of us.
Yeah. Having followed your stuff now for a long time, when you made the note about Maduro being captured on exactly 30 years since the capture of Noriega.
It's 36 years to the day. That
36,
was on the
right.
Yeah, 30. It was on the 3rd or 4th of January this year, and exactly that date, 36 years earlier, we saw the capture of Noriega by George Bush Sr. And in fact, just on the 1st of January, we saw the installation of Zohran Mamdani as the first Asian Muslim mayor of New York. And 36 years earlier to the day, we saw David Dinkins installed, who was the first African-American mayor of New York. It's a little bit interesting, isn't it, when these things come out 6 years to the day?
Yeah, even, it's a remarkable series of coincidences. It poses a great many questions. So you started off as a student, you find like economics frustrating, so you find something that has greater explanatory power. How did your career as a pilot come about? What was the story there?
Well, it was a childhood dream. I first went on a plane when I was 4 years old and really thought, yeah, I want to do this. That was that. But I think what the key point, really combining the two things, is that was the ability to take the skill sets that we use in flying big jets around the world, working with checklists and data. Effectively, you're working with the information in front of you. You said, I was a student. Let me just stress, I still am a student. I am still very much learning every day, and I hope I never cease being a student, because something new comes up every day, and it's fascinating if you live in geek land. So the idea is that we could take the skill sets used in flying big jets and be methodical and objective, take the subjectivity out of it, because human behavior ultimately is based on subjectivity, what everybody else is saying around you, that the mass psychology sweeps up. So the idea is to use objectivity and checklists. One thing that I'm a huge fan of, my trading system, and certainly when I was running a hedge fund, was all based on a checklist, like how we get a big jet airborne and how we deal with non-normal situations and how we just deal with a journey, a flight in itself, because that's what everything is. It's a flight from A to B. That's a cycle from A to B.
And I know you're an instructor more now than you are a pilot, aren't you? As an instructor of pilots, what kind of things are you looking for to help someone develop, and also things that you want to discourage?
That's a great question. If we want to keep this in the flying context, we want somebody that's going to go out and be safe and professional and stick to the rule book. We have standard operating procedures. Now, if we take that into the trading and investing arena, so we're kind of leaving cycles, because cycles are one tool to be able to make investment decisions with. We all know that on a retail basis, 95% of people have blown up their trading accounts within 6 to 9 months. But we also know that 5% succeed, and people who follow Phil and Ackle and PSE and everything you're involved with, Jonathan, they're amongst the more successful people. And what is it that makes them succeed? It's the ability to see through the noise and to have a system. And most importantly, the one thing that links both of these professions is managing risk. That's it. If you can manage risk, then you can keep a plane safe. And if you manage risk, then you can also trade successfully and not get caught out when something goes against you, but you can be very well positioned to take advantage of the bigger moves.
Brilliant. So how about we get back in now into some of more of the secret sauce or the work you do? Because the other question I've got around cycles is when they don't always come to it. I know, because when I mean, and you and Phil and Ackle, you tell people to be aware of these dates.
Yeah.
And then sometimes we just go straight through and nothing happens. And then other dates, like the one that we've just looked at with Iran, that was just uncannily accurate. So what is it that about a cycle and how you've found the ones that are more powerful and the others that are less influential?
So it's all about it. You can't just have one cycle by itself is likely to have little impact. And I'll give you an analogy momentarily, but the idea is where you get a layering of cycles all coming together is when we get a high probability event. So let's say you, me, Phil, and Ackle are all hanging out, which we do quite often. Let's say you've got a nice cafe where we can get a nice coffee and a sandwich, and you go in there every Thursday, right? Phil and Ackle join once a month on that Thursday. So you're there every Thursday, then once a month, the three of you are in there, right? And then I come and join you every 6 months. So what's the date that all four of us will be in that cafe together? And that's the whole point, is that that's when the big party is. Now, when you get all the cycles coming together, you get a big event. So today we've talked about Iran and what's going on, America and Iran. That we had the 45-year cycle coming together with a 36-year cycle. That was very important as well. But I don't want to confuse people. And we had daily trigger cycles as well. So this is the whole idea that when the big parties, when everybody's in the room, and if people understand that concept, they understand the layering of cycles. But a word of caution: you can have too many cycles, and some might be cycles causing upward pressure. It doesn't matter whether it's market cycles, and some might be creating downward pressure. I say upward, downward. It could be negative, positive, whatever you want to call it. There is always a risk of that cycle, these cycles cancelling each other out, because it's like a tug of war then. Okay, if everything's going that way, that's great, and everything's going that way, but they're suddenly fighting it out, we might end up with nothing happening, or nothing apparently happening. The point is, there is an underlying cycle in play there that not necessarily manifests in a world event. And that's, you ask, sometimes these things fail, and that's why. And the other thing that can occur is translation. Well, translation is the sideways movement of the cycle. So it comes in earlier or later. And that can be deflected by another cycle, just pulling it over, like having a bit more of a magnet impact. But personally, in my work, in pure cycles, that in itself, that translation should be discounted by a very clear cycle itself. So, it's the question of, are cycles set in stone or not? And as I said, I'm still a student. I'm still trying to figure it out.
So what I'm very keen for us not to do is to leave people confused by the cycles and the different the areas that can come in, because what I've seen from your work, from Ackle and Phil's work, is it provides clarity or an opportunity to look at and be particularly aware for certain signals at certain times, which sometimes we go straight through, so there's nothing on, so then it's like everyone stand down, so that it's like a storm forecast, isn't it? Is it the storms are not always there, but you're going to see signs coming in of when the front starts to appear, and I think that's really where I see the value of your work. So could we then look ahead and to see what are you seeing right now, what's coming up that we need to be aware of? And I'd like to encourage our listeners and viewers to take a perspective as if you are the general or the long-term weather forecaster looking out over the long horizon and to have that perspective. So if you see a detail coming up or Andy says something, just notice it and then allow the picture to come together. And what I think I've heard you describe the cafe analogy of you, me, Akhil, and Phil being in the cafe together once every 6 months as the confluence of cycles. Is that right? So when the cycles come together. So if you can tell us what are the individual cycles that are coming up and what confluence of those cycles are you looking at right now?
Okay, so let's keep it simple and look at the big picture. I do have quite a few views on the current political situation, but let's just focus on some of the stuff that I have mentioned when Phil and Akhil kindly invited me to speak at the last PSC event in London. But one of the key things that I note is that 2029 will be the 100-year anniversary of the 1929 crash. So I think that's quite important. Well, what does that tell us? Well, if we're going to see an exact overlay, it means the stock market will probably go up into that window. Probably, right? That cycle favors that. Now, it's not always that easy, right? So there's other cycles that are before then, and we're in one of them right now. And the other thing that's coming in, and you can see this now very clearly, the Second World War started in 1939, and the 90-year cycle from that also takes us to 2029. So when you're looking at the scheme of a 90-year pattern, and we're in 2026, we're 3 years out, you can see how this is already playing out, right? This escalation we've seen between America and Iran is not going to go away very quickly. So these are the backdrops. But there is, as I say, you've nailed it, Jonathan, because you said you don't want to throw too many cycles about. But there is one other one that I do want to highlight, which is this 82 to 84-year war cycle. And we've been talking about that. And what we see here is that if you go back to the Second World War and the latter part of the Second World War when America joined in and you had 1941 and you had 82 to 84, well, that takes us to 2025, 2026. And that's exactly what's happening here is that America has not necessarily come into a war, but it's now sparked a war. And I think that we're going to have repercussions from that over the next 3 years. So that's the backdrop of things there. But the other things we see is that we're in some big cycles relating to commodities, and I think we might well see some big moves in commodities. We've already seen gold move. We've also seen oil move substantially. But other things happening in the background surround things like the grain markets and the food markets. And I think they're looking quite strong. I know Phil has been talking about cotton as well and has done some excellent work on that. I know that was released to the followers a few days ago. So these are sort of some of the bigger cycles that are showing that I would say that is the long range weather forecast is that we are in. I mean, it's obvious now, but I mean, had we been having this conversation a month ago or even like, where are we? 3 weeks ago, this wouldn't be that clear that we are in troubled waters, as it were, and interesting times.
So, Andy, I very much appreciate that. And given I know how much Andy, I know how deep your research goes and how many interlocking cycles that you actually study. So I appreciate the simplicity of the picture that you've given us. I would, however, like to bring in one cycle which you've spoken about, and that's a 250-year empire cycle that is currently over America, which has got its 250th anniversary in July this year. Could you take us through that and also just maybe weave back in the other cycles that you've mentioned just to consolidate this for our listeners? And if you are listening, Andy does have some slides on this, guys. If you do want to listen and then come back and look at these slides when you're able to, I think that might help with the understanding.
Sure. Let me bring those slides up now. What we can do is to give people an understanding of how we got to where we are. And the story, I mean, we're talking about right now, Jonathan, but we've really got to go back to 2016, 2017. And the reason we have to do that is that that was a tipping point. The world went from globalization to polarization. In Britain, we saw Brexit. And basically, America, we saw a new type of leadership in the form of the 45th president then, who was Trump. Basically, what we see here is that this whole 250-year cycle of death and rebirth, it's all about change. Everything changes. Quite often, empires last 250 years and change. And you can see how that's happening right now. But this is where we are now. We've put a wide window on it, 2008 to 2033. But I'm going to update this. But if you go back 250 years, it takes us to the American Revolution, 1765, the Stamp Act, all the way through to Yorktown, 1781. 1776 was the Declaration of Independence. So the 250-year anniversary you talked about. But let's go back another 250 years. And if we go back to 1517, what we saw there was, on the 31st of October, 1517, Martin Luther nailed his 95 Theses to the church door in Wittenberg. What this meant was that this started the Protestant Reformation, challenging the Pope. This was huge. So what we're really seeing is that as we got to 2016, 2017, we had a 500-year cycle and the 250-year cycle. But the story doesn't stop there. And let me just add another bit to this, right? This is why 2017 was such an important tipping point. Because I mentioned already the 82 to 84-year populist movement cycle, the war cycle, the revolution cycle. And why 2017 was so critical was that if you headed back 82 to 84 years, you saw Hitler rising in Germany from the Great Depression as well. Germany had been made to pay huge reparations. The economy was dying. They were paying for the Great War still, after nearly 15 years, 14, 50 years. And Hitler rose up. Hindenburg had been a weak chancellor. Hitler had been really seen to be talking the correct language, and getting people excited again. Not dissimilar to what we're seeing in certain parts of the world right now. And you can go back to 1848, 1849, the previous revolution. And there we saw at the beginning of 1848, Karl Marx and his friend Frederick Engels published the Communist Manifesto, which was workers rise up, break free of your chains, because what had been happening there was Europe and the Western world was going through great industrialization. And your Jeff Bezoses of the day, or whatever you want to call them, were using children and slave labor and everything. And the workers were very much, had no decent conditions, paid poorly, but they were creating cottons and, mining, coal mining, all this sort of stuff. So it was a workers' revolution. But the story doesn't stop there, because we can go back another 82 to 84 years and say the Stamp Act really accelerated the American Revolution. So that was the backdrop in which we were working. Now, where are we right now? We are in the 250-year cycle from the Declaration of Independence. Okay, 2026, the 250-year anniversary. Is it the end of the Constitution as we know it? This is huge. Is America changing beyond belief? We're seeing a whole new style of leadership, one that is proactively going out there and is expansionist. Whether it's done with any proper follow through and thought remains to be seen. And that could be the death of America as we know it and the rebirth into something different. So this could be the end of the Constitution as we know it. There's talk about rigged elections all the time, constantly talk about rigged elections. The incumbent, look, I have to stay political. Please, whichever, whether you love Trump, hate him, or indifferent, this is not any criticism. It's an observation of human behavior. All this stuff's going on right now. And basically, this is because we're in the 250-year cycle. And I'm going to come back. If we go back 50 years back, or 500 years back, 1526, the Spanish formed a major colony. This was the first documented enslaved Africans in America. These slaves escaped and they went and lived with the native tribes. So this was pretty big, 1526. So you can see it was all change. Now, the other things to point out, sorry, you get me on a bit of a rant here, Jonathan, but what was on the other side of the American Revolution? They didn't rebel.
I was just wondering, how can I get you to take a breath? Because it's,
No,
but what is amazing,
because it's too exciting.
I'm sure every listener will see this, is that I don't know anyone who is more passionate and more engaged around the cycles as you are. So please forgive Andy his enthusiasm, and it's also the reason why he goes so deep on so many things. So Andy, please take a breath, um, and
Okay, I'll take a breath, but I have to finish this off, Jonathan. I have to tell you.
take your time,
So,
and just help us all come along with you.
all right. So I hope you've stayed with it. The other side of the 250-year cycle from, it was that America was not alone. It revolted against Great Britain. So what's happening to Britain? Britain is also in this 250-year cycle. And the other cycles coming in for Britain aren't that great. You can see, we are very much stagnating as an economy. We do have a Royal Navy, but it took a week to get a ship out of dock and so on. It's not what it was. So you can see changes in the other nations involved there. I'm just going to take this a stage further, but one of the interesting things about the 4th of July this year, obviously Trump had planned a huge celebration. As we get to that point in time, the World Cup will be on. And that's going to be very, very divisive. I suspect it's going to be used for political reasons and maneuvering. They've already said the Iranian team are not welcome, but it would probably be inappropriate for them to go there. It remains to be seen. But there's a bit more to this, and I'm slowing down now, Jonathan. But where we are in the present 80, so that should be 81 to 84 year cycle there, is that 2026 is the anniversary. We go back one revolution and we see America joining the Second World War. Importantly, we go back another revolution, 1861 to 1864, 1865. America was in a civil war itself. And we go back another revolution and we find that America was finally getting rid of the Brits in 1781 at Yorktown. So what we're seeing here, and it's obvious now because we're in this war, these slides were created before that. And the point of this was America was going to be at war. Now, let's just look at these Civil War cycles fine-tuned. Again, 1776, 1861. America joining the World War after Pearl Harbor, December the 7th, 1941. And the Civil War cycles project into, I think, Q3 of 2027. Now, this is also going to align with what was happening in, I don't want to bring too many cycles in, but the 60-year pattern of the 1960s where we had civil rights issues. So you can see that Trump came in saying there were going to be no more wars and that gas prices were going to be cheap. And somehow, suddenly that's changed because this isn't just a minor war. This is the mother of all wars. And, my view is that this particular war hasn't been thought out in terms of its consequences. Ultimately, the destruction of the GCC, remember, they're petrodollar nations. And this is all about the petrodollar.
Sorry, Andy, what's the GCC?
The Gulf, Corporation of the Gulf States, basically Bahrain, UAE, Oman, Kuwait. So big oil producers sell it in US dollars, keeps the petrodollar going. What do they do with that money? They reinvest it in the American stock market. That's what keeps so oil money goes back into America. These countries buy American arms, Saudi Arabia again. Suddenly, if they're all being destroyed, and there's the key structural points here is water, because they all need water, the desalination plants. If those desalination plants are taken out as they are being, these countries are going to revert back to nothing. And that in itself will impact the US economy. Now, I've gone off at a tangent there. And I think what we're seeing here is that in itself will accelerate a civil war within America, because I think just the mood has changed substantially, even in the last 2-3 days. When Venezuela was a quick intervention over hours. The way I understand it, when this started on the 28th of February, GMT, or 27th American time, they expected it to be over by Monday. As a Friday night intervention, and the stock market would be way up and there would be no impact on oil. And in fact, the opposite's happened. And in fact, there doesn't appear to be a plan. Or there is a plan. America's gone in with a fist fight, and the other nation, Iran, is playing a chess game. And you can bomb and bomb and bomb and destroy and destroy and destroy. But if it's a chess game, you're never going to win. And that's something that I think is now starting to dawn on some people. And it's not until America sees sleeper attacks that this will become a reality that will divide the American nation. I'll just stop there, Jonathan.
Thank you for that, Andy. Let me just recap then. If someone's skeptical about cycles and they just say, okay, so there's a
Yeah,
coincidence of events, so it just happens that if I was making a movie about America or the next generation, then to have a divisive president in the White House during the 250th anniversary of the Declaration of Independence, having the whole world watching, not just the ceremony, but also that the whole world is coming to America for the Football World Cup, it wouldn't make a better script, right? And I think one of the things with this in any anniversary, if all of us have anniversaries or big birthdays, when we get a big date, we tend to reflect on, well, am I where I want to be? What is the future of the country? What were our founding principles? What was the Declaration all about? What's relevant today? Those questions will be at or near the surface for everybody. And there is that divisiveness. My own sense, I know in our media, there's the perception that of Trump, the election rigger. It's just that I think around the world, actually, politicians and have not been paying sufficient attention to democratic principles, um, and we're not being honouring the sacrosanct nature of an election and the importance of democratic principles everywhere. And I think all sides are party to this, and us as citizens as well. And I talk about this in the postcards I do. Phil talks about citizens' dividends, and we have to be citizens to get a dividend. And I think many of us have not been a citizen and we've not engaged in these conversations and we've left politicians to it, allowed the undermining of democratic principles, the best example of which was during COVID, where there was massive overreach for whatever reason, but there was massive undemocratic overreach and authoritarian overreach around the world. So if Trump for you or anybody is authoritarian, okay, there's evidence for that. It's just that compared to everybody else, I don't see him being a monster and everyone else being fine. I just see it more as a degree of difference, and the way in which he approaches things is slightly different. But we've got to reinforce that democracy, haven't we, as citizens? That's where I'll go with that. Andy, what I'd like to do is have a change up of.
Trump actually has done a lot of good stuff for America over the last few years. He's a lot of it's been quite positive, certainly compared to what had and hadn't been achieved in the preceding years. So, there are pluses and minuses to all these things, Jonathan.
It's a great point, mate. If I'm placing bets, and we are, right, on trouble for the West, I see trouble for America. I know there's got internal strife, but we have in the UK, it's just not as
Yeah.
pronounced. And I think that the stuff that Trump has done to rebuild America, to, in his words, make America great again, much of it has been extremely positive, and it will have a very positive effect on America and also a negative effect on UK and Europe. And I see UK and Europe having way more trouble, in part because there isn't a decisive leader, or the leadership that came in the UK, all the stuff they promised to do, they haven't done, and they're doing stuff that they never even mentioned. They're solving their energy problems in moving away from net zero. We've still got it. I'm talking to business people right now whose companies have gone under through no fault of their own, but energy costs have made it impossible to trade and run their businesses in the UK because we've got the highest energy bills in the world, I think. America have been fixing that, and we've got no solutions whatsoever. So in that sense, we've got these challenges. Now, what I would like to do, and if it's all right, is I know you as a pilot, I just wondered if you could show the listeners how you take these cycles, how you look at the confluence of the cycles, and then say, right, practically, how could this affect the oil price on Monday? How could this affect gold? And how do you help people to take your insight and wisdom and put it into practical effect in the markets?
Okay, so one of the things that we've created is a timing system where we're able to hone the big cycles down to daily cycles, i.e., we can look at the cafe over a year or two and see when everybody's in, and also equally we can see what's going on when one person's there by themselves. Okay, so what we've got is reference points. Now, most people who trade and invest whether it's your retirement, if you're your superannuation in America, your 401k, your retirement fund here. We'll generally take a broad view, but those who are trading and investing quite often will do it on tips, on fundamental stuff. And, it might work, it might not work. What we've got here are objective cycles. So they give us points from which we can make decisions. What I mean by that is the key challenges in trading and investing revolve around FOMO, fear of missing out, or letting a profit turn into a loss and things like that. So if you know something's going to happen, gold is a really good example. Everybody piled into gold, and we were putting warnings out saying February would be critical. As it happened, the high came in just on the 28th of January, just 2-3 days before that. But within a monthly cycle, that's an accurate tolerance, because we talked about huge monthly cycles in February. So if you know when these things are going to come in, you can protect yourself. One of my very dear friends said in early January, I've put half my retirement into gold and silver. And I was thinking, how are you protecting it and how are you going to get out? And that's the key point. So by having these timing points, you know when something is at risk. That's the key point. So that the idea is that we know that a trend is at risk at some point, or we know a trend's potentially about to start. And therefore, we can manage the risk effectively. And we do that with some timing systems. So let me just share another chart here with you, if I may.
And I just want to reiterate that, Andy, and also link it maybe back to, so as a pilot, if you're flying, I know in a previous video that we did, which we can link people to, you talk about flying to New York. You're aware if there's been a forecast of a weather system, over Greenland or over Newfoundland, you bring particular awareness to the possibility that you may have to do something in response to that. And so, whereas normally you'd be able to say, do you know what, I'm just looking across all my instruments, you now have to focus in on the signals that would tell you that this is something you have to pay attention to. So it's a way of guiding your awareness, isn't it, to things that may happen. It may not, but actually you're bringing your awareness and you're looking for your if-thens of if the weather front is going to come over to affect our flight path. I will be seeing X and Y, therefore I then need to divert. I can change my route. That's right, isn't it?
Situational awareness, right? So let's do a standard flight. Let's go from London to New York, okay? Well, when we turn up, the first thing we're going to do is obviously we want to know what the weather's like. Not Heathrow to start with, where we're leaving from. And also we want to know what it's going to be like at New York so we can be prepared accordingly. But we also want to know what the weather's like en route. Like you've just mentioned, we might want to know what the weather's like, say, in the Azores, if we're going to southerly routing, or say Greenland, Iceland. And then as we go through Gander, Labrador, all the points that we might potentially divert to. So we have, and first of all, we sit there and we brief it and we have a plan. So that's situational awareness. But then once we get going, we update that plan, and that's called dynamic situational awareness. So we're updating, okay, the weather's actually a little bit worse at, say, St. John's in Newfoundland, or actually it's a bit better at Halifax in Nova Scotia. So we have this ongoing plan. And the reason we have that dynamic situational awareness is that we're expecting the airplane's engines to keep working and the hydraulic systems, and we're expecting everybody on board to stay well. But we might have a problem with an engine, we might have a problem with the system, or we might have somebody who might have a little bit of a cardio condition, and we might have to get them to a hospital. So we might have to divert. That's the key point. This is known as situational awareness. And then when we get to New York, they might say, well, there's some delays here. You might have to hold for 10 minutes. That's okay. You might have to hold for an hour. We don't have enough fuel to hold for an hour. So we will divert to Newark in New Jersey or Windsor Locks or something like that. So the point of this is situational awareness becoming dynamic situational awareness. When you get into gold last year, what was your situational awareness? Did you already have an exit point? This is what we teach in our courses. People who want to trade and invest. If you talk to traders, the majority who enter a position don't have a clear view of where they're going to get out. But, as I say jokingly, and I think we've said it at some of the events that we've been at together, is how many of you have been on an aeroplane? Everybody goes, yes, of course. Now, how many of you have been on an aeroplane not knowing where it's going? And then people start laughing. But how many of you have been in a trade not knowing where you're getting out, right? And that's the same concept. So the idea is that if you don't have a destination in mind with regards to a trade, now, The idea is that if you know where you're going to get out and you know where you're going to get in, you can manage the risk, and you have what's called a risk-reward ratio, i.e., you've got the odds on your side now because A, you can time it, and B, you know the prices and you can manage the risk. So if you know those points, and you might be wrong, but if you have this in advance, then you can say, I'm not going to take this trade because the risk reward isn't in my favor. Or actually, this is nice because I can risk 1 unit to make a minimum of 3. And that's what we recommend, a minimum of 3. Now, if you keep going to a casino and every time you lose 1. And every time you win, you make a minimum of 3, a minimum, because you can trail a stop or whatever, then the odds are on your side in the long run. And this is exactly what it's about. So the situational awareness of what we had with an airplane is what airfields are going to work, what airfields are not going to work, what's the systems update, are all the oil pressures, temperatures, hydraulics, electric systems working fine, etc. What are we going to do if it doesn't go to plan? When you get into a trade, what are you going to do when it doesn't go to plan? I have one client contacted me saying, I have literally just lost millions in gold. How could I have, where was this in the market timing report? And I said, well, it was very clear. There's the key date. I said, let me ask you another question. What was your intention? What was your target? And they said, oh, actually, I didn't have a target. And it's, okay, right. Well, what were you doing? I was just going to buy and hold. Well, you're still buying and holding it. You just might have lost millions. And in fact, you never had those millions in the first place because you never cashed it in. So this is this idea that one industry, flying big jets, caters for contingencies, whereas another industry with Joe Public does not cater for contingencies. But when you run a hedge fund, you've got to cater for that contingency completely. Some people were taken off guard with the price of oil, just 2 weeks ago. We were the opposite. We were able to position for it and have views on that, and still have views on where this is going to go. The initial window was just over the weekend, a 2-3 day window, but the bigger window now is potentially going to go on for years. Whether that's going to impact the price of oil so much is a different thing, and we have done our analysis on that. So the key turning points in that are there. So that's the kind of analogy that I think you were interested in, right, Jonathan? How I relate trading and investing to flying aircraft. And the other thing is that it's the ability to react, or better still, preempt, okay? I mean, there's different levels of operation. In the perfect world, you want to be thinking ahead. You've thought out the potential pitfalls and you've got a strategy. And that's thinking ahead. Equally, there'll be times when something happens and you literally understand it and you have to make a decision to cope with it. And then the worst case is where you're behind the drag curve. You're behind the drag curve and you notice something after it's happened. So now you have to mitigate that situation. So in the case of somebody, my client who'd lost millions trading gold because they hadn't implemented the system, they noticed with a great pain in their wallet that suddenly they'd lost millions. Whereas if they'd got a clear target using a predictive system, of course, in fact, that gold actually hit the clear target we gave, hit that target using the systems we teach, some of our people got out there or got part of their positions out there. So that's the difference. But think ahead, know where it's going, have a plan, or rather react, and then you're trying to get out of the hole that you fell into and then try and fill it up afterwards as well to stop it happening again. So that's the key point. So if I can put this into a practical thing, let me just bring up a couple of charts here and we can take a look. Oil, people keep asking me about. I'm just going to just show this chart here. We do have a very significant turning point as we head into the beginning of May. Now, I'm not saying that's the high or low. I think we're going to see a lot of volatility between there. The point really is where we see peaks and histograms, we tend to be prepared for a change in trend. That was a weekly chart. But here we can see daily charts as well. And you can see that we talked about May, but there's also a potential trend change there just at the very end of April on the 30th. So we'd be quite interested in managing a position there at that point in time. Here's the S&P 500. In fact, let me go to, this is the S&P 500 through to 2029. And you can see there are some clear points. Let's go back. You can see some trend changes here. These spikes, you can see a low here. We can see actually a bit of a pause there. That high came in on that one. There's a major low there. That brought that high in. This was the Trump tariff top that we talked about. Remember when Trump came in for the second time, everybody was saying the S&P is going to the moon. It's going to hit 7,000 very quickly. Well, not before it sold off. Some of our clients did very well with that. And basically, we're just lining up with this point here. And there are other points. So you can see that we talked about 2029 being important, but actually there are cycles in 2028 that might come in just a little bit early.
At the bottom of this diagram, Andy, what is
Yeah.
it that you're showing for those peaks?
Oh, yeah, that's a very good point. Yeah. So what we're seeing is here is the cafe concept. There's a lot of people popping into the cafe right here together at the same time. That's when all of us are in the cafe, and that's bringing a turning point. The same again here. Everybody's in the cafe at the higher spikes. And again, we've got a high spike there. So this is like the smaller spikes where two parties are in or three parties. The bigger spikes are when six or seven parties are all coming in. So it's basically, in simple terms, confluence of cycles. Now, because we know these turning points, okay, we can forecast them and we know where they are, we're able to manage the risk in trading and investing. So this is like our alternates on our way to America. We know these are kind of safe haven points. We can dive into Iceland and refuel or get somebody to a hospital there or whatever. In trading, it means we can be prepared for a change in trend. So if we were longer market, and there would be a point that we would want to protect that position. So the reason this is valuable is because what was happening, and in fact, let's just say what's happening with oil right now. People are saying oil's going to go to 200. Oil might go to 300. It's all speculation. It's sentiment. And boy, is there some sentiment right now. Like there was sentiment about gold and silver. It's going to whatever, 5,000, 6,000, 10,000. That's what Joe Public is telling you. And remember, the professionals drive these markets. That's something else we look at and we can talk about in a minute. But the professionals drive these markets, and Joe Public get in at the back end of it all. Okay, they're the ones that generally lose. The professionals suck them in, they offload at that point. So sentiment is always something's going to the moon. And this was perhaps one of the best examples here, the 2025 Trump tariff top there. Everybody said this was going to the moon, and it really sold off quite viciously. One of our clients made 152% just trading this move down and up again over 6-7 months. And on a serious portfolio, he's done very well. A good friend of ours down in Australia. The sentiment was saying this is going to the moon, but the cycles are telling you be prepared. And that's exactly what happened. So this is how this system works here. The idea is that we can then use this information to protect ourselves and also, join in and with minimal risk exposure or get out with minimal risk exposure.
And does the cafe analogy work with individual stocks and trades as well then?
It works with everything. It doesn't just work with stocks, it works with human behavior. Now, that's probably outside the remit of what we're talking about here, a very complex situation. But the cafe analogy was also what enabled us to forecast the outbreak of this conflict. That's exactly it. So many cycles came together to suggest that something big was about to happen.
You just mentioned there just about how people's behavior repeat, but that's not really what we're getting into today. What I'd love to do is we've got the S&P 500 there so people can trade that. Some other people may also prefer to trade individual stocks. So can you give us some examples of how you look at individual stocks to see when they're more likely to do one thing or another that could possibly be tradable?
Absolutely. So what we can do is I'll just show you our seasonality platform, and you can see what a seasonal bias is in any particular stock that we cover. And the idea is that you're already getting the odds on your side if you know what the seasonal deviations are, as it were. So let me bring that up. Can you see this, Jonathan? So this is our seasonality platform, and suddenly there's a massive information coming at you here. This is effectively a calendar. This is the calendar for March, the highest probability trades that we look at on a seasonality basis. Now, we can hone this using other techniques, but let's just stick with seasonality. And if we take the highest probability trades, they're in green, we now have something to work with. So is there anything in particular you'd like to look at, Jonathan?
Well, given that our spiritual home is Australia, how about we look at Australian stocks or
Okay,
opportunities?
certainly. Right. So what we do cover here is everything from the key indices, major currencies, US stocks, sectors, Australian, Canadian, European, Indian, the financials, all the commodities, grain, soft, etc. So let's make this nice and easy. And let's start off then with, did you say Australia would like to start with? Is that so? Here are our highest probability Australian stock trades here. And is there anybody else or any other country that we want to look at?
We've got where in the UK, so let's look at those as well.
Okay, so let's keep it simple. What we can see here, as we come to the 26th, BHP, we can click on that. This is a big Australian stock. We've got 37 years of data. And if we look at this pattern, it does tend to go down into January, rally up into February, and then back down here, and then up really there into August. Now, what we see here are a couple of opportunities. What we can see is that it hasn't done too badly following this. It's slightly ahead of itself. But if we click on there, you'd probably normally want to get out of the stock there on the 23rd of February, and it tends to sell off into the 16th of March. Well, if we look at this line here, you can see that's actually worked pretty well so far. So this is giving you ideas where if you wanted to sell the stock short, you could do that. Now, you use your own analysis on the chart itself. But here's another one coming up. And this one here runs from the 26th of March to 15th of April. And that suggests, because it's green, it's a buy situation, that over the last 37 years, 75% of the time, on an annualized basis, delivering returns of around about 52%. And you can see here, we've got a breakdown. These are the years here. So this pattern failed around here and here, but for the most part, it's been in the green, and the failure years are shown here. But just coming back to this specific trade here we talked about, long 26 March to 15th April. This is not advice, by the way, but basically you can see the average gains. And if you've taken that every year, the compounded, not the compounded, but the total returns, your average loss where it's gone wrong or it's gone against you has been 4.7%, and the maximum drawdown there has been 12.5%. So you can see you're already getting a bit of an advantage there. So that's the first thing there. So that's BHP. If we go back to where we were, we've got Bunzl here, which is a UK stock. We've got 33 years of data. And again, this tends to make lows in January. And again, it's not been too bad. This is what it's done so far. It's followed it reasonably well. Heads up into this sort of area here and sells off here. We can see there's three really high probability setups. And again, it's not advice, but you've got to look at it at the time. But the first one here is this time period here, which starts on the 20th of March and finishes on the 10th of April. So again, you can see this one here, 20th March, 10th April. It's worked 75% of the time over the last 33 years, delivering annualized returns of 56%. And this is a really great one here, 29th of June here to 16th of July, works very well. 75% of the time it's worked, 57% annualized returns. So that's the simplistic way of looking at this. There are so many opportunities, and there's another great setup here. Again, worked 80% of the time there from 19th of August through to the 3rd of September, delivering annualized returns of 75%. So you can see that if the market is looking like it's making these turns and your other indicators confirm it, the odds are very much on your side. And this is just the seasonality level, but there's a lot of opportunities here across anything, whether you look at currencies, commodities, etc. And because we created so much, we immediately want to get the optimal ones. Over here, we can see these are the ones that have performed the best. JBHT's a start, natural gas there. JBHT, 5 patterns have shown annualized returns of 91%. That's the ones that have worked best up till now. The ones that are correlating the most clearly are things like ZL, that's soybean oil. 96% correlation. We can click on that and you can see there how well that's working. So you can see that this one has done very well indeed. And, on the basis that it's correlating well, we can expect it to correlate as well. And again, we would do our analysis just to confirm that. So it just points us in the direction of where we might find some really good opportunities. Now, we can combine this with other stuff where we can look at what the smart money's doing, Jonathan. And what we're going to do there is I'll just bring that.
Just want to stress to people so that they know that this isn't about financial advice, right? The analogy that we've been using is if we're flying from London to New York, we're looking at possible weather patterns or possible opportunities for a nicer and a more enjoyable flight. So you're looking at this, now you then take it and look at how you decide what to invest. Then I'm going to make my own choice based on the factors that you look at. Andy's now going to show you what else he looks at as well, just to give himself some more nuance or some more reassurance that he's on the right track.
Yeah, and everything we do, both in flying and in trading and investing, is about incremental gains. And that means that there's no real holy grail. We want to make sure we cover as many points as possible to keep everything as safe as we can and keep the odds on our side. And on this basis, one of the things we've created, which I'm very pleased with, is our smart money platform. And what we look at here is the flow of money. And it has to be reported every week to the US government, everything that's traded in America with regards to futures contracts. So we're looking at commodities, currencies, etc. And there are effectively three different sets of players. They're the people, we call them the smart money. They know what's going on. So they are either the farmers, they know the condition of their crop, or they are the hedgers. So there might be somebody like Hershey or whoever makes chocolate or whatever might be interested in the price of sugar and cocoa. There might be banks hedging futures contracts, etc. And all this information comes out in huge spreadsheets every week. And we've put it down where we can fine tune it and filter it. And every week we get a readout. And basically what we're interested in is what the smart money are doing. Now, when they are at an extreme behavior, i.e. they think something's not quite right, so they're jumping in there and hedging their position, when we see that, we're able to act accordingly. So what we're interested in anything that is trading in a light color with numbers below 5%, as it were, or 10%, is a potential sell on the futures contract. Now, we must stress this is not advice. This is just how we carry out our analysis. Anything that's in a darker color is a potential buy opportunity. And we have to dig deeper. And incidentally, you can see the Aussie dollar there. On the futures contract, remember, it's different. Some of these currencies trade inversely. But one thing that's really caught my eye is this one, cocoa, right? It's got 3 times 100%. Now, this is a little bit complex, so I'm just going to give you a very quick talk through this so you can see what's going on here. And let me just expand this so you can see it in more detail. What we've got here in cocoa is this is our index that's giving us the 100%. So when it gets up towards the top, we're kind of interested in buy situations.
Andy, sorry if I'm asking a daft question. What is it 100% of?
Right. It's our indicator. All right. So, but it's basically, we've got an extreme of activity that we haven't seen in the last 3 years. We're looking back at everything over the last 3 years. And that's a very good question. I don't want to turn this into a PhD project other than to share. So that is true. And we're looking at 3 years, 18 months and 6 months. So what we're saying is all the tides are flowing in the same direction is what we're really saying. And on that basis, when we get to this point, we're often prepared for a move up. And sometimes it can take weeks or months. But this is what's going on. Now, as a market goes up, right, if you're a producer, as the market's been going, you're going to sell because you're going to make more money, right? So I've got some cocoa, I can sell it for this much. I'll hang on to it because it's going up. Now I'll sell more. And you get to a point where all your cocoa that you're producing, you've sold ideally for the highest price ever, right? So this is what happens is that the smart money is selling and selling and selling. But when it gets to a point where it's relatively cheap, it starts buying. It's kind of like, well, actually, I'm going to make chocolate, so I'm going to make chocolate bars, so I'm going to buy my cocoa really cheap. And what we see here is the smart money, which has indicated their behavior in green, is now buying. It's increasing over the selling. There's a lot more to this, but the default position is that usually selling is greater than buying. And when they start buying, it means something is up. They know something about cocoa, that something's going on. There are other people we look at, but let's just keep it simple here for the purposes of this. Now, what this shows us here is that this is data over the last 20 years, and we can take further back, but we can see these behaviors. Where this buying increases, you tend to start preempting moves. Now, let me just now close that and revert back to where we were a moment ago. And if we go into here and I type in cocoa like this, what do we see? Well, we see this is our cocoa now, and it's made a low here. It's gone against the seasonality, but there's a lot of buying pressure in the smart money, and we're now looking at a potential move up, potentially into the back end of March, and then up into April. And the last part of this move tends to get quite fueled. You can see 75% of this time here over the last 20 years, between the 14th of April and 29th of April, cocoa has gone up substantially with annualized results of 75%. But because this is starting to make a chart pattern of moving up here, and it's taken this old high out here, you can see that this could be something that we'd be very interested in, because the smart money is driving it and the seasonality is aligning with it. Does that make sense there, Jonathan? And you can see, again, it's not quite so bullish there, but it still does run into a peak there. So just the last 20 years, though, show us that this is an effective point for the market might move up. So that's how we use some of this information.
Amazing. So what we've got there is how you take all this, what could be considered esoteric wisdom and insight, and then bring it into the market and then sense check it with what you describe as the smart money of what are the insiders doing, yeah. Which was, I know we haven't really talked about him in this podcast, but we talked, about W.D. Gann and Gann's insistence on understanding what the insiders were doing and why that's why you had to rely on the charts, because there was no other way of knowing what the smart money was doing in 1929. So, Andy, it's been a fascinating conversation. I think our listeners and viewers, even those who have met you and seen you before, will have got something new there, and hopefully we're able to manage for those who maybe haven't seen you before. They've got enough to know your seriousness and why you work so closely with Akhil and Phil. What we'll do at the end of this we'll put links into other presentations, because I'm conscious that we haven't spoken about your relationship with W.D. Gann and his insights, which I know you're one of the top students on Gann, and that's one of the areas that you and Phil talk about the most. We will put a link to those previous talks, and for subscribers, we'll put links to your other presentations that you've done with property share market economics. So just before we close, though, is there anything you'd like to finish off with and just to say to our listeners and viewers?
I just want to thank everybody really for watching this stuff, and whether if you're doing this for trading and investing, make sure you've got a system and you manage the risk effectively. Cycles do give us a huge edge. Study the work of Gann. I was very lucky to have catalogued the collection for the family that own it, and therefore I've seen what's in there. It's a very interesting collection, and not only that, it's proof that we can forecast to some degree. I think you've always got to manage the risk, and human behavior doesn't change. There is no new thing under the sun, as it's said in Ecclesiastes, and in other all other cultures have that same thing. Everything repeats because humans don't really learn. So thank you for your time. I hope you found something of use here. I'm sorry I'm such a geek, but I wouldn't have it any other way, and I'm still a student.
Well, Andy Pancholi, super nerd, thank you very much for your time and insight.
Thank you so much, Jonathan. It's been a pleasure.
Great. Thanks, guys, for listening, guys. Be sure to check out the other podcasts. And if you can give us a like or subscribe, it will really help. And just as I say on all the other podcasts, keep reading, and I'll see you on the next one.